Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 4th, 2011. Well, folks, unbelievably quiet volume intraday here today. 52 million on the SPY. Doesn't get much lighter than that. Markets are very much in a sideways pattern here, kind of looking for the next catalyst. Is it going to be catalyst to the upside or the downside? That's what we have to figure out today as we analyze the charts. Now, bottom line is, as you can see, we had a small gap higher today, a little bit of an initial push. The markets came right back in, but they went right to gap fill. Remember, for anyone who trades from a technical standpoint, this is what you're looking for. Gap fill, look at the bounce that you get. So a nice little scalp intraday. Markets come down, retest it, again bounce, retest it again, and they bounce again. Now, the more times you hit this blue line, which is basically at gap fill, the more likely you will eventually break lower. So just keep that in mind. Now that we've hit it multiple times, it is not or would not be surprising to see us break down. But the market, again, on the other side of the coin, you have to say to yourself, is very, very light. Look at the volume today, folks. The volume is probably on pace for under 100 million today. It's already after 1 p.m. Eastern time, and with that type of volume, it's very tough for a market to break down substantially. So again, you have to go by what you're seeing here on the charts, which is first of all hitting a level of support multiple times. It weakens it, but the light volume could very well keep this market neutral all day long. Again, Mondays are just like that. Things should kick off tomorrow, get more volume in this market. Again, any sort of weird catalyst would be a good little semi-move in the market one way or the other. We're going to follow it. Now, what I want to do is go into some charts. We want to take care of some charts, but before I do that, I want to just remind you there's a free trial offer on InTheMoneyStocks.com, 1 week free. Research Center, which includes everything listed under the Research Center, and 1 week free of the intraday stock chat. You can come in at your willed intraday stock chat. We're always doing live analysis, hardcore market analysis. You'll be able to see our charts, ask questions, you name it, it's there for the taking. Get a handle on the market by taking the intraday stock chat or Research Center free trial. Research Center is for swing traders, intraday traders, more day traders are all about the intraday stock chat. All right, now let's go into it. First, let's take a look at the dollar. The dollar is basically hovering in a neutral setting today, a little bit off the lows of the day, but I think Friday is really the key. The gap up on Friday speaks volumes about this market and what the dollar is all about. The fact that on Friday you could not hold any of the massive gains and the dollar collapsed lower and closed flat to negative was very telling for the state of the dollar, the US dollar right now. And that has to say, you have to say to yourself when you see a chart like that, that's a very weak chart. If you can't hold your gains on a gap up and a move like that early on Friday, that's a very bearish sentiment for the dollar in the longer term and possibly even in the near term. Now, if we go to the daily chart of the UUP, which is the dollar ETF, you can see you continue to hammer on the resistance of this blue line. The blue line was support. Right here it bounced and then came back here and bounced again. But once you broke and you confirm to the downside, this now becomes resistance. Remember, broken support becomes resistance and vice versa. So as you traded back up into it, you pulled back. On Friday, you gapped up and pushed above and then fell all the way back, and that continues to be resistance. Support, obviously, would be this area right down here. All right, so that's what we're seeing right now on the charts. Next up, let's take a look at the commodities. The USO today is trading flat to positive after an unbelievable gain last week. Oil again breaching the 107 level by Friday, and again, 107 was the key high that was put in on the Middle East crisis about 2 to 3 weeks ago. We're now back to that level and pushing above it. Oil right now sits up on spot crude above 108 per barrel, folks. 110 is the key catalyst. I think if you hit 110, that's going to be where the markets start to freak out a little bit. So watch 110. I think you can probably trade up to 110 as long as it's slow and steady without the markets really getting too fearful. But you hit 110, I do think the markets start to sell a little bit on that. And it's very likely you will hit 110, no doubt about it. Commodities overall are having a good day. The GLD's off the highs, but still up 60 cents. And silver's the standout here. Silver's up 70 cents, and that's only a $37 ETF right now. So that's a big move. And again, silver pulled back a little intraday, but has pushed back up by the afternoon or early afternoon session here. So silver having a good day. That's the SLV. The GLD is what I just showed before, and that's the gold ETF. Now let's take a look at some stocks, guys. First of all, a stock I mentioned multiple times last week was Research in Motion. Now, Research in Motion reported not so good earnings a couple weeks ago, and the stock on the daily chart came down beautifully into the 200. Many traders, investors, research center subscribers asked me, well, is that a buying opportunity? I mean, should we go long here for a swing trade? And I said, listen, you're probably going to get a day or so bounce out of this, but there's a head and shoulder pattern here that's in perfect formation that tells me that ultimately this stock will go lower after it has a small bounce. All right, and sure enough, you can see you pierce the 200 and you get one day up, and then the next day you gap up, and then that was it. And so the call was absolutely dead on. A little bounce, micro bounce. Maybe if you're quick, you take a one-day swing trade off of that, make some money, but then look for further downside because the target of the research in motion, head and shoulder, is much lower at below $50. So right now that told me ultimately, even though if it did get a small bounce, it was going to go lower. And today research in motion is down $1.20. And again, symbol there is RIMM. Chevron, again, has had a monster move with oil strength, but today is kind of stalling out a little bit. Again, had an interesting reversal a couple days ago. If you go to last Thursday, it had a big gap up and sold and closed negative. On Friday, it inched up inside, but right now you're inside this red candle from Thursday. As long as you stay inside, you could make a case that there's a little top formation there, although again, with oil doing what it's doing, it's tough to know for sure. But right now, that would be how you would read this. Inside the red candle is possibly an in spirit of bear flag starting up, but again, if it takes out the high of that red candle, which is right over here, that would be 100% negated, and you probably would go upwards of 110 to 111, maybe even 115 on the Chevron chart. So again, right now you look at this as being a bear flag right there off of the red candle, which could again fall to the downside. But remember, if it takes out that pivot high, that is 100% off the table, and you will probably go a little bit higher. ExxonMobil is also a little bit weaker today, right on the flat line, but again, for a market that's kind of hovering right here, it's doing okay, I suppose. Taking a look at a couple other stocks, Apple Computer, guys. We scalped this in the intraday stock chat many times today. Very bearish activity on Apple. I talked about this in the intraday and nightly videos multiple times last week for a couple reasons. Number one, Apple was falling or flat when the market was rallying all last week. Look at this action last week, and it looked like a little bit of an in spirit of bull flag, but the fact that it wasn't rallying with the market is a very bearish sign. I don't care if it's a bull flag or a bear flag, but if you see the market up 100 points in a day, or 75 on the Dow, or 150, or the Nasdaq's up 20, 25 points, and Apple's negative, you have to look at that and say, wait a minute, something's wrong there. And sure enough, that's what we were talking about, and I kept on talking about this almost in every video because of the weakness. And sure enough, Friday, Apple collapses even when the markets were up. Today, the markets are flat, and Apple's down another $4.25. This thing is not looking healthy right now. And again, I've talked about this. I think I wrote an article 2 or 3 weeks ago discussing how it looked like institutions were kind of unloading into the populace, the retail investor, as the retail investor was using new money for the quarter, or the end of quarter window dressing was going on. Institutions were just selling right into that, folks. And again, I believe that does and is occurring as we speak. And ultimately, I think Apple has made a longer-term top here on the charts. Now, I don't know how much it's going to go down or if it's going to have a pop in the short term, but right now you have to say to yourself, weak showing. Markets are flat today right now. Dow Jones Industrial Average is up 19 points. Nasdaq's actually down about 1.5 points, and the S&P's up about 17 cents. So basically a flat market, and Apple's down over $4. Not healthy at all. All right. Other stocks in motion today. Intel, I find Intel's weakness very interesting, and that's why the Nasdaq, of all things, is down slightly today. Intel broke through this pivot low here. That means it's heading lower, folks. This is a breakdown on Intel, and I actually don't like that first level. This is my favorite level right down here. This one right here. I think at this point you can look for a swing trade long on INTC, and that'll be a major support. That's at $18.95 on Intel. So still about 50 cents away or so, but I think at that point you would start to get very interested in Intel, as I think a lot of institutions will get interested at that. At least that's what the rumors are that I'm hearing. That's a big level, and analyzed myself, that is 100% the level to look for should Intel hit that. All right, so that's what we're seeing here as we continue to watch. JP Morgan and Goldman Sachs are differing today. JPM trading up 17 cents while Goldman's down about $1. And looking across the board, I think that's all I want to cover today. But I encourage you to come take the free trial of the Research Center. Again, the swing trading side, the investing side in that Research Center will give you a leg up to make more and more money in this market environment. The choppiness of this market now is perfect for that. And again, get involved, test out the free trial, see what you think. And again, you can go to In the Money Stocks and take it. If you're an intraday trader, or if you want intraday advice, stop in at the chat room. 1 week free trial there as well. Have a great afternoon, great evening, folks. I'll see you all in the Research Center later. Talk to you then.